Hey everyone, Ben here and welcome to Motivation to Invest. Arkg Invest is an investment firm which specializes in disruptive and innovative technology. One of their most popular ETFs right now is the Arkg Invest Genomics ETF, which specializes in the biotechnology industry. Now, I recommended this ETF many months ago, and since then it's up by around 180%. So congratulations to you guys who earn major returns on that ETF and investing into those genomic stocks. So in this video, I'm going to reveal my top 3 holdings in the Arkg Invest Genomics ETF. But before we dive into that, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. If you do find any value in this video at all, feel free to give it an early thumbs up. That helps out tremendously with the YouTube AI. If you do want to know exactly which stocks I'm buying, which stocks I'm selling, in addition to accessing my entire investment portfolio, then feel free to check out that first link in the description below for the VIP membership group. With that being said, let's dive in. So gene sequencing and biotechnology is set to transform our lives, from curing hereditary diseases such as hereditary blindness in children to effectively allowing us all to live forever free from disease. Firstly, a little disclaimer: the biotechnology industry is fast changing, complex, and requires a vast amount of upfront capital to be invested. This is a real high risk, high reward industry. So as a little disclaimer, I am not a biotechnology scientist. I'm not an expert in this industry by any means.
Neutron walks into a bar and asks, "How much for a drink?" The bartender says, "For you, no charge."
I will simply be approaching these stocks from a purely investing and business standpoint. But having said that, the first stock on this list, I believe, is actually a really simple business to understand and actually a really great one to actually invest in personally. So kicking things off in stock number 1 is Teledoc Health, ticker symbol TDOC. So this makes up 7.76% of Arkg's Genomics ETF. So Teledoc is a market leader in virtual healthcare. We do everything else online these days, so why not see your doctor online? The company recently announced a merger with another fast-growing healthcare company called Livongo, and this is a great combination for the companies. Now, I've actually done plenty of videos on Teledoc Stock in the past 6 to 8 months ago, covering that stock, covering it as a potential investment opportunity. Full disclosure, I did invest into this company myself, and since then the stock has run up massively. So diving into the share price here for Teledoc Health, let's say if we go back to August 2020, and then if we go to now, we can see the stock is up by around 45%. It did go up a lot higher, around 55%. Now, in this crazy market we're living in, 55% return in 6 months may not seem like it's amazing, but trust me, that is amazing, especially for a large, quite established company like Teledoc Health. $38 billion market cap. This is not a small cap company. This is quite a safe company. Although the valuation is high, I believe it's worth it for a company like this in the virtual healthcare space. Okay, so let's dive into those juicy financials. We're here on Stockopedia. This is a platform I use to analyze stocks. If you guys want to check it out and see if it fits your investing style, I've actually got an exclusive 25% off discount link. I'll leave that in the description below. Feel free to check it out and see if it fits your investing style. With that being said, dive straight into the growth rate, because this is what I like to see. Compound annual growth rate on the revenue over the past few years is 66%. Now, generally, I say a growth stock is one which has grown their revenues at least 20% per year. So 66% is incredibly high. If we look at this year to last year, we can see the sales growth was actually 100%. So that's incredibly fast growth for a company like this. The company also has a fortress of a balance sheet with a current ratio of 6.52. Generally, I look for a current ratio of at least 2. That means the company has enough cash to cover their short-term liabilities at least twice. This company has a 6.52, so plenty of cash on hand to cover any debts and also make even some more acquisitions. Analyst consensus on this stock. So we've got people here from Deutsche Bank, Citibank, Morgan Stanley, and many more. 9 say hold, 10 buy, and 8 a strong buy. Nobody is saying sell the stock at the moment, so that's quite interesting there. Negative for the stock. It is unprofitable at the moment as they're reinvesting their profits for growth. So that is a risk with this company. So that is just something for you guys to be aware of. This is forecasted to improve over time. So as you can see, net income was minus $137 million in 2020. By 2021, that's expected to reach minus $80 million by 2021. So the profitability of this company is improving over time, which is good to see. Valuation is quite high. So you've got price to sales here of 44 looking backwards, so not looking at forward projections, but still 44 times the company's previous sales. That is quite a high valuation, but I do think this is a fantastic company, especially if you want some exposure to the virtual healthcare space. Okay, so on to stock number 2, and this is a pure play genomics stock. That is Pacific Biosciences, ticker symbol PACB. So this makes up 5.42% of Arkg's Genomics ETF. So diving into the share price here for Pacific Biosciences, we can see it was around $4 per share in July 2020, and now it's up by over 700% at $35 per share. So a 700% increase within the past 6 to 8 months. That is incredibly high return. So congratulations to those of you guys who invested into this stock. I did mention this stock on the channel a while back. I didn't invest into it myself personally, but fair enough for you guys who did invest into this stock. Fantastic returns. Still high risk though, as it's in the genomics industry. Market cap is just $6.6 billion, so still quite a small company relative to a company like Teledoc or even Illumina, which is another player in this space. So what this company does, there are 2 types of gene sequencing methods. You've got long read and short read, just to keep it simple. So Pacific Biosciences actually planned to merge with Illumina, but that was halted by the Federal Trade Commission. So this was plans for a $1.2 billion merger that was first announced in November 2018 and fell apart in January 2020 after the agency objected on anti-competitiveness grounds. For its trouble, Illumina paid Pacific Biosciences a $98 million termination fee. And with full disclosure, Arkg actually sold its entire Illumina position. And I also had a position in Illumina, and I sold out my entire position in that stock also, just because they weren't decreasing the cost of their sequencing fast enough for my liking. Biosciences hit the reset button, announcing a new CEO at the beginning of August. So they had a management overhaul, and the company launched its Sequel system, which lowered the cost of the data processing requirements for long read sequencing. So that is the key there. With this gene sequencing technology, it's all about reducing costs to make it accessible to the masses. During the company's third quarter earnings call, the CEO pointed out strong sales pipeline as well as plans to dramatically increase the size of its global sales force, which stood at about 20 people in November. They also have a lot of cash on the balance sheet, which will come in handy as the company does not generate funds from operations during this time. So that's a risk with these gene sequencing stocks. So long read gene sequencing, which Pacific Biosciences specializes in, may be essential for reading some portions of the genome, among them areas that may hold the keys to understanding conditions such as autism and even Alzheimer's disease. So let's dive into a few numbers for Pacific Biosciences. We're here back on Stockopedia. Compound annual growth rate on the revenue, not looking very good at all on any of these numbers. So you can see this is a high risk, high reward play. Compound annual growth rate only 8% over the past few years. Company's unprofitable. Sales growth minus 12% this year compared to last year. So it does look like this company is in a terrible financial situation. But really, in this industry, this is normal. This is normal to see, as if this company has a major breakthrough with its technology, then sales can skyrocket very fast. So this is what you get when you invest into these type of risky companies. However, revenue is forecasted to increase by 2021. As is net income is forecasted to actually become profitable, this company is, by it says late 2020 there. So this company was profitable, I believe, here for 2020 for a brief period. Earnings per share is also set to become profitable. Diving into the analyst consensus, 3 say hold, 2 say buy. So nobody's saying sell this stock at the moment. So quite interesting there. Current ratio 1.84. Generally, I look for a current ratio of at least 2. So 1.84 is not too bad. That's fine, really. Although I would like to see that a little bit stronger, considering the company is unprofitable. Price to sales, much higher valuation. This is a classic genomics stock. Price to sales of 79 right now. So you're paying 79 times the company's sales. So that is majorly high, the valuation for this company. And this is what you get. These are high risk, high reward plays. This is a company with tremendous upside if it can bring down the costs of its sequencing and actually make it available to the masses. Also interesting information here, the number of bullish hedge fund positions on Pacific Biosciences of California increased by about 22% from the previous quarter. So hedge funds are becoming more interested in this stock, and the best thing to do in this investing game is to follow the smart money. Okay, so onto stock number 1 is TWST Biosciences Corp, ticker symbol TWST. This makes up 6.34% of the portfolio. So TWST Biosciences is a leading and rapidly growing synthetic biology and genomics company that has developed a disruptive DNA synthesis platform to industrialize the engineering of biology. So they have a proprietary technology that pioneers a new method of manufacturing synthetic DNA by writing DNA onto a silicon chip. Now that is the key there. So TWST is leveraging its unique technology to manufacture a broad range of synthetic DNA-based products, including synthetic genes, tools for next-generation sequencing, and antibody libraries for drug discovery and development. So it's basically taking these genes which are being read and being sequenced, and converting it to an electronic and digital format. They basically talk about ordering the DNA you want online, which is actually crazy to see. Obviously, we order everything online these days, but ordering DNA online and actually checking if certain DNA can be sequenced and checking the databases seems very, very interesting company. They're also working on battling this whole global issue. So they have got a few products which are helping to produce antibodies to fight this whole global issue. So that's another sort of tailwind for this stock. Okay, diving into the share price here. The company was $40 per share in June 2020. And now the company is up by 400%. 400%, guys, in the past like 6 to 8 months. Market cap just 9.6 billion, so still quite a small company. Great share price performance, and you can see with a lot of these stocks, and I think this will help to show you guys this market quite clearly, is you can see these stocks can have fantastic performance, up 1,000%, 400%, and the business can sort of be performing okay, but not as good as the stocks, and that's because the stock market is forward-looking. So it's looking at pricing these stocks for perfection. They're expecting them to have major breakthroughs and actually this technology be adopted mainstream. Okay, so this company has been going for a growth at all cost strategy, which is very high risk. So the business has poured money into marketing and research, but doesn't appear to be on the path to sustainable profits yet. In fact, operating expenses have grown faster than revenue and gross profits, and that's what we don't like to see. But this is in the top 3 holdings of Arkg Genomics ETF, and that's why I'm discussing it. This company has also done a heap load of share dilution. So TWST Bioscience has relied on sales of common stock to fund operations, including 2 offerings from mid-February to early June. The number of shares outstanding has grown from 26.6 million at the time of initial public offering to 44.5 million today. Now, many of you guys have commented below when I've mentioned share dilution before, and you said, Ben, this only affects big hedge funds. It doesn't affect us as a retail investor. Well, this company has doubled the amount of shares it has available for its stock. So that means your position in this stock would effectively be worth half. That's just how valuation works. Now, this is an extreme case of share dilution. Usually, it's not that bad, but in this case, it's extremely bad. A lot of share dilution in order to fund research and development. It is a high-risk method these guys are using for growth. So diving into the numbers here for TWST Biosciences, let's dive into that growth. So they have got a fast growth rate, 151% compound annual growth rate over the past few years. Revenue is forecast to increase $154 million by 2022. Forecasted net income is forecasted to improve. The company is still unprofitable at the moment, as is earnings per share is forecasted to become positive, as it's still negative at the moment. Analyst coverage, 3 hold, 1 buy, and 1 a strong buy. Current ratio, this company has got an extremely strong balance sheet, so that is good to see because they've sold all that stock to raise all this capital to fund their business. So current ratio 9.29, so they have plenty of cash on hand, so that is a good sign to see with a company like this, which is investing heavily. Price to sales, 97. Now that is an extremely high valuation. 97 times the company's sales. So for me personally, with this stock, I would wait for a major pullback before investing into this stock. This is just my personal opinion if you're thinking about it. However, on the list that I've went through, Teledoc I think is a major, great company. It's not even a genomics company, so I don't know why it's the number 1 on their list. I don't think they're really involved in the genomics space, but still extremely interesting company. It's still a disruptive, innovative company in the healthcare space. So I think Teledoc is definitely a great one. That's got my seal of approval. I do like Pacific Biosciences if you're going to invest into any genomics stock. TWST Biosciences, one to watch, but not one to invest in right now. I would wait for a pullback if you're thinking about investing into this company. There's also another one I did a video on recently called Sarepta Therapeutics. This is a company also in the genomics industry. They had a really bad quarter. Their stock had a major decline, and thus I saw that as a potential buying opportunity. I'll leave a video on that stock in the description below. The stock still might be down today, so it could be a great opportunity if you guys want some exposure to this highly lucrative, high risk, high reward market. With that being said, I hope you guys did find some value in this video. If you did, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button, turning that notification bell on. If you do want to know exactly which stocks I'm buying, which stocks I'm selling, in addition to accessing my entire investment portfolio, you can talk to me directly about your own life and investing decisions, and any tips and advice you need, you can talk to me in the VIP group. So if that's something you might be interested in, check out that first link in the description below. With that being said, I hope you guys have a tremendous day, and I'll see you all in my next video. Invest safe.